wanted to prevent that. There are certain categories of legislation where it is possible to prevent that filibuster. And so that was the big development yesterday. When the House took up our budget, they finalized this process of giving us this legislative opportunity. So you may have seen it characterized as a $1.5 trillion tax cut. That's the way it's often described. That is really a mischaracterization, and let me describe what we are about here. What we're striving to do and what I think we're going to do is actually on the order of $5.5 trillion of lowering of counterproductive tax rates, and then offsetting that lost revenue for the federal government with about $4 trillion of what we call base broadeners, or increasing categories of income that will be subject to tax. The net of that, of course, is $1.5 trillion. However, that $1.5 trillion, it should be seen in context, a couple of bits of context. One is that is out of about almost $45 trillion that we are projecting the federal government will collect in revenue over the next 10 years. I mean, these numbers are unbelievable, aren't they? Right? Yeah. That's what it is. And the $1.5 trillion is also misleading for some technical reasons about how it's counted. It's really going to be $1 trillion. It's about 2%, a little over 2% of federal revenue over the next 10 years. But that assessment does not take into account what I think is very, very likely to happen, which is a huge, significant increase in economic growth. And so let me tell you about the provisions that I think are going to be in this tax reform package and why they matter. So I'll give you three categories, the way I think about it. The first is the individual side of the tax code, right? Every individual has to, an adult individual with income has to file a tax return. And we think it's important for middle income, working class families to have a reduction in their tax burden and to have a simplification in the process by which they file. So that's one of the things we're solving for. The way I think we're going to do the major simplification is by dramatically increasing the standard deduction, so that many families will have no taxable income at all, because the standard deduction will go up to $24,000. So if your income is below that, it's obviously a low level of income, but for those people, there will be no tax. That's a 0% tax bracket, you could say. In addition to that, we're going to increase the child tax credit, because we're going to do away with some of the personal deductions. But the combination of the increase in the standard deduction, the child tax credit, and some reduction in the rates themselves are designed so that, as I say, people of modest and middle income and upper middle income are going to see some reduction in their direct tax bill. But where the real economic growth comes from, in my view, is what we're going to do on the business side, and that would be my second category. As people around this table probably know, we've got a terrible tax code when it comes to business, whether it's a C Corp or whether it's a pass-through. 35% is the top rate that we impose on C Corps. It's 39.6 plus the surcharge for companies that are organized as pass-throughs, not C Corps, but partnerships and subchapter S companies and LLCs, potentially much higher. Well, the problem with this is that the rest of the world has been about lowering their business tax rates for decades, to the point where the OECD average is now 22.3%. When we have 35, we are putting ourselves at a systematic competitive disadvantage with the rest of the world. And this makes no sense at all. So our goal is to lower that rate to 20%. And at 20% marginal rate, we'll be competitive with every major economy in the world. And there will be still some tax havens that will have lower rates. I mean, Cayman Islands has 0. Ireland has been at 12.5, and they're probably going to 8 or so. But at 20%, we're going to be very, very competitive with all the major economies in the world, and that's a much better place to be than 35%.